Good afternoon, everybody. Today I'm joined with Max Porterfield from Callinex Mines. In this interview, we get into Max's thesis on why he's excited about copper. We discuss Callinex Mines, some of their recent discoveries and their ongoing drill program. And we also get into the cap structure that has led to Callinex outperforming many of their peers. All right, everybody, enjoy the interview. So Max, it's our first time having you on here, and I have to ask you about your thesis for copper. When you wake up in the morning and you're getting out of bed and you have a reason to get excited in the morning and you're thinking about the future of copper, what is it that you're thinking about? What's your thesis on copper?
I'm exceptionally bullish on copper. It's a long-term thesis. The long-term metal prices need to go higher. That was going to be driven by supply-demand fundamentals. If you go back to 2014, when I took over Callinex, which were smart for copper, we made the move into copper with the long-term thesis that copper prices need to move higher, and there's going to be a squeeze on copper. And if you looked at the environment back then, you were at a $2 copper price environment. No one was excited about exploring for copper. And that really leads into the situation right now. You've had a lack of exploration over the past 10 and 15 years, if not a bit longer, for base metals overall. And when there's a lack of exploration, there's a lack of discoveries. Lack of discoveries lead to the lack of development. And then with all things considered, leads to an issue, which will lead to higher prices. Now, what's being added to that equation is this really move to the electric vehicle and moving away from the hydrocarbon oil and gas altogether, the attempt to do so. That incrementally is putting a huge demand in copper at a time where copper supply is already very tight, which really leads to my thesis about it really being a super cycle for base metals, particularly in copper, because of the reasons I just mentioned.
All right, so we were just at the Beaver Creek conference. We actually got to meet you there. And the one thing we kept hearing from all these companies, it just seemed to be a theme, is commodity prices are near all-time highs, but everybody hates the producers, the developers, the explorers. What do you think's driving this disconnect right now?
Well, I think overall, there's been other areas of the market where when speculation has been on, that money's flowed to there, really leaving the junior resource market kind of void of capital overall. And that's also led to the lack of ability to exploration. You have to have enthusiasm in your sector with money flow to raise capital to do that work. And I think really, again, the advent of the cryptocurrency has taken a lot of capital away. I think more traditionally the gold names, really looking at crypto as an alternative currency where traditionally you would have had, gold, silver, been a place for that. And then the equity is the way to play that in a leveraged way. And that's kind of taken a huge amount of money. Then, of course, you have the marijuana names, and then the psilocybin names more recently. So, in AI. So, everywhere you turn, there's been a speculative sector that's kind of emerged that's taken away that capital that typically go into the high risk resource plays. That's, where you make big money on a discovery. So, again, I think that all things considered really have a perfect storm, because when that money flows into the sector, it's going to lift all ships. As I say, in a rising tide, all ships are lifted. And so I think that you want to be positioned in names that are poised to outperform relative to the peers. But certainly when that move does come, it's going to be a very quick move that you will need to be positioned for already, in my opinion.
All right, so let's get into Callinex Mines, which could be one of those names that I think investors might find interesting if they're doing their due diligence on potential names that could offer some leverage. I see one significant drill hole that you guys hit, I think a couple of years ago, where you hit 6% copper, which is sort of an eye-popping number when you see over not an insignificant interval over 30 meters. So for our guests that are new to the show, one of the questions we like to ask them is, what's the high-level overview of the company?
We're a high-grade exploration company, especially for high-grade copper deposits in northern Manitoba. We've hit a number of those discoveries, as you've mentioned, that was coming out of our Rainbow discovery, which culminated into a maiden resource. But again, we've got a growing portfolio of discoveries that we've made at our Pine Bay project that's located in a Tier 1 jurisdiction in Flin Flon, Manitoba. with direct road access and all the infrastructure with power on site, water on site, within a mining lease, in proximity to this community that, again, has about a 100-year history in mining, over 32 mines, and they need a new mine for the community, and we're there to deliver that.
So when investors think of mining in Canada, they're often thinking about, Quebec or Ontario. It feels like Manitoba doesn't really get a lot of talk despite a ton of historical success. Why do you think that the province has sort of been ignored by the general retail investor market?
Well, largely, I think because a lot of those jurisdictions that you just mentioned are more readily known for gold. I mean, if we were to put it simply, Manitoba overall, in terms of a jurisdiction, you're not really known for agriculture in southern Manitoba, but mining northern Manitoba, which makes up the bulk of what drives the economy in northern Manitoba, is mining. It's going to be more on the base metal side. There has been more recent some gold discoveries. Hudbay have had some success with producing gold in the Snow Lake area. But Manitoba for the Flin Flon area, which is, historically VMS deposit, which are high grade polymetallic base metal, precious metals. So again, you have the mix of gold, copper, zinc, and lead in some instances. And then of course, you're also known for Thompson, and then Thompson's known for nickel. So again, in a base metal move, I think Manitoba and these other jurisdictions within Canada that are known for base metals, like New Brunswick, for example, the Brunswick number 12 mine was the largest underground zinc mine in the world when it was in production. So there are been some giant base metal mines in these other jurisdictions, and I think you're going to get a lot more exploration dollars flowing to those as exploration for base metals ramps up.
So you guys recently published a mineral resource estimate for the Rainbow deposit at Pine Bay. What can you tell us? Is there potential room for expansion here?
So yeah, that actually came from, we started with one discovery hole in 2020 at our Rainbow discovery. We've grown that on the resource estimate itself. It was nearly 6 million tons across the different categories in the deposits, but we've got the Rainbow deposit, which is the largest deposit of the two that we published, is 4.7 million tons of high-grade copper. In the indicated category is 3.44 million tons of 3.62 copper equivalent. And when I say copper equivalent, over 3% of that is copper. It was 3.14% copper. And to put that in context, the global average grade of copper mined around the world is less than 0.5%. So high grade discoveries in a safe jurisdiction are going to be heavily sought after. That's why we spent a long time looking for them. Now, moving forward on the property, we have two other discoveries. One is called Alchemist that we discovered last year in 2022. And then this third discovery on the property is called Descendant. And Descendant is an area of the property that we've spent, on the property ourselves 9 years looking at. The exploration on this particular area of the property actually goes back to 1919, where everyone's always been drawn to it based upon the geology to host a large deposit. The last explorer there was Placido that applied for a 30 million ton target on this particular area based on the geology. 30 million tons in context would be the second largest mine in Flin Flon's history, if you were to put that up against the historic ones in terms of size. And we just hit the discovery there at depth. It was 4 lenses of mineralization. We're in the zinc gold portion of these deposits. Again, they're polymetallic, which indicates we're on the edge of it. And if you look at a similar mineralization in Rainbow, we're at the top of it. And so we're having immediate follow-up right now on that discovery. And it'll be about a 5,000 meter campaign to step out. And that's where you start building significant volume very quickly on a new exploration drill hole. So we're not a company where look at us and go, hey, this is a deposit that was found in 1955. Metal prices have moved. Something geopolitically has changed. It makes it viable. We are the bread and butter of how you make a lot of money in this business, and that's through exploration and the drill bit with our ongoing discoveries that we're expanding at Pine Bay.
This is a question our editor, Jay, had. In your view, what's the most underappreciated aspect when when you're talking to investors or analysts about Callinex? What's the most underappreciated aspect of the company?
I think the discoveries themselves. I think that the overall market's been relatively muted because of how difficult, challenging things have been. So our discoveries in large context have been muted, and so again, trying to find new discoveries, very, very challenging, and finding a discovery that is going to be, obviously on the higher grade, which will in turn, ultimately, when you go to a producing mine, potentially be more profitable based upon being a high grade, is just not been valued into the story just yet. And oftentimes that does occur. Resource markets overall, as I mentioned, the disconnect between the equities and the commodities is a broader disconnect. But that's where you can make a lot of money on any different play if you understand the fundamentals behind it. Well, then see these disconnects occur.
So here's another good question for you guys, because we had a chance to sit down and talk about this at Beaver Creek. But I know for a lot of junior investors, when they look at these companies, they get a little bit freaked out by the idea of the cap table, who owns the shares, and ultimately what their long-term vision for the company is, which in my view has largely hurt a lot of the good junior mining projects out there, because they've taken money from what could have been good investors. What can you tell us about your cap table and the average price paid for shares from investors that have sort of hopped in at this point?
Yes. So in terms of our cap table, we have 17.1 million shares outstanding. 25% is held, nearly 25% is held by insiders and close associates to the team. Myself and my family are roughly 10%. So again, been the long-term investors in this, predominantly built the position through open market and some financings. In terms of institutional ownership, that's nearly half of our float. Our structure is held by institutions, namely the likes of McKinsey, which is one of the top performing natural resource funds in North America, 1832 Asset Management. It also runs the Dynamic Funds, which is a very well-respected fund, institutional investor in the resource space. Resource Capital Funds has been a shareholder going back 8 years now, which is a big private equity fund in the space. And then, of course, the remainder that's going to be held by different retail investors, that, big and small, that have just invested in the kind of through the secondary market or the open market. No debt in the balance sheet. In terms of what investors have paid in those financings, all of the financings, since I've been at the company since 2014, with the exception of one single financing, it was $1 million financing, which times were particularly tough in 2019, have all been north of $3 a share, and based on its current structure. So today the stock's trading around $2.30 a share, which is obviously frustrating. But every single finance we've done, we have caught the financing structure at a time when the share price has been a bit stronger than certainly it is today, and have had support from really well-established names of smart money in the space.
It's not down that much. When I was chatting with, I chatted with dozens of CEOs at Beaver Creek last week or 2 weeks ago, and I heard a couple of them tell me that they had received some death threats. So now their shares were in much worse of a position, but I think it creates an interesting opportunity for investors who are liquid and looking for great stories.
Yeah, I was just going to make a comment on that in terms of the muted response that I'd mentioned. We've outperformed our peer group, but I'm not really satisfied with that, quite frankly, because the peer group hasn't performed too great. So what's the point of being, a better performing loser? But at the end of the day, in terms of the share price performance, not as people. But at the end of the day, that's where the real opportunity lies. You look at the valuation of Callinex, we were roughly a $30 million market cap, leading into our first discovery at Rainbow. And now you can buy Rainbow. That discovery is a main resource alongside the Pine Bay deposit, with Alchemist and Odin and the Descendant finance and drilling out, stepping out on discovery, or relatively, $10 million extra in terms of market cap than we were trading 3 years ago. And so that's where you have gaps in the market where we've outperformed our peer group, certainly, but we haven't outperformed relative to where we should be as a company based upon the work that we've done. And that is where I think there's opportunities, particularly from a risk-reward fundamental, depending on how you look at it as a value investor, to buy companies that have put a lot of resources on the table that haven't gotten the love and valuation that they should for the work that's been completed.
Yeah, I'm a big believer in this space that the shareholder base you have is super important for whether you're going to actually drive shareholder returns, right? Like, the fact that you guys are outperforming your peers says something about who actually holds the shares here, and it hasn't been dumped. Whereas just so many of these mining companies, they work with various vendors, or they had those early sort of founder round type things where they've given certain investors sweeteners to get into deals, and then the stock ends up flying down 90% over the course of the last 2 years without really any bad news hitting the company. The fact that you guys haven't had any of that, to me, speaks volumes to the shareholders that you do have.
Yeah, certainly. I think that, obviously these fund managers, as well as they are honestly as well, they all have to deal with their fund flows. So that depends on the structure of the fund, whether it be open-end fund, closed-end fund, a private equity fund that's got a set term and structure. But again, asset flows out of the sector are going to affect all these institutions. And so to have the support of the institutions relative to our peers has also been excellent. But also the strong institutions that you mentioned that have outperformed and done a good job with their investors' money aren't going to see those type of outflows. And that's where the steadiness and the quality of the investor you have really makes an impact, as you mentioned.
Do you guys have any partnerships you're working with right now? Is that something that you guys get? I would assume some of the majors reaching out to you to see if there's ways that they can sort of sink their claws in a little bit early. Is that something you guys are considering at this stage?
We are definitely having been approached by a number of different players out there in that, and really I think that you look at that from more of a strategic standpoint. You do something like that if you don't have the ability to raise capital the way we've raised capital, for one, or when you have a strategic that comes in and brings more value at the stage of the game or the business that you're in, than you can at the current moment or for the foreseeable future for the project. And if you look at our technical team's been credited with not just one or two discoveries, but half of the discoveries in the Fun District of Manitoba's history, and 3 of the 4 largest. So from an exploration standpoint and the drill bit standpoint, that really gives credit to the discoveries that we have made, is the expertise that our team has in this particular area of the world for this deposit style. So when you take that to all things considered, we've remained 100% independent. We have no strategic investors to that end, no other owners in the property. We have them all 100% outright. And that is because of our skill set in terms of as we advance things moving forward. We also more recently brought on Peter Jones, who's an engineer, who's a former CEO of Hudbay, the mid-tier company that's mining all the mines in this area of the world's history, as our technical advisor from an engineering standpoint. So Peter's not only helped raise the money as CEO of Hudbay, but built a few of the largest mines in the Canada's history. So we're happy with where we are right now in the moment, but that's not to say that, deal in terms of struck that made sense for our shareholder base, that we wouldn't go out and do something like that. But certainly not looking to do that given this exact moment.
So for any investors watching this, potential investors over the remainder of the year, are there any sort of milestones or events that they should be watching out for with the company?
Yes, certainly. It's going to be drilling. So we're stepping out on the Descendant discovery. Descendant's got one single drill hole into it. That discovery hole was very wide in terms of its interval. We had 27 meters of massive sulfides, which is what burying the base metals, the precious metals, and massive sulfides over a 67-meter interval. And that's an exceptionally wide interval in this type of deposit style. If you look at Rainbow, the orange zone or lens is 8 meters wide. So when you get these type of wide intercepts, you build volume that much more quickly. So we're stepping out immediately, and based upon the geology that we hit and the type of mineralization we hit, we feel that those 4 different lenses can actually merge into a single large massive sulfide lens, which can be continuous across those 4 different intersections. And so as we step out and we test that thesis, should we be successful, that's going to be a very, very key catalyst for the shareholder base, investors, the market, and the asset more particularly, because that's where you'll be on to building significant tonnage and really de-risking that asset, if you want to call it that, or adding tremendous amount of value as you build volume of high grade mineralization there. So that's going to be the key driver, is going to be the results from the drilling that we're just getting started to step out on a descent discovery.
So Max, thanks so much for hopping on here today, and good luck with the drill program. And hopefully you'll come back on here in the future and give us an update. And we've got some good results to talk about.
Thank you very much for having me. I've had a great time today.
All right, everybody. Thank you for watching. If you could do me a big favor, please smash that like button, subscribe, and ring that notification bell, and let us know what you think in the comment section. All right. Thanks, everybody.